Sutat was just talking about the institutionalization of wealth management and so on. That's certainly been something that's grown very quickly in Singapore, very strongly in Singapore. Why is Singapore as a capital raising centre not grown in the same way?
Well, I think I dispute that it hasn't risen in the same way. I think it has. We were just talking earlier that actually while IPOs may have been a little bit scarce, the secondary market raisings remain remarkably strong actually.
And we're able to get international investors to come to Singapore, which are a far larger contribution to our market than the domestic investors. And the size of the prize is big. Domestically in Singapore, there's 3.3 trillion of funds under management, but there's more out there that's allocated here. The second aspect is to another point that you made earlier, which is really wealth management. We have such a phenomenal growth as the fastest growing private banking centre in Singapore, where successful entrepreneurs in China, India, Southeast Asia put their money here. Guess what? Their risk money is still in their business, and here it's safe money, and that's why we have a fantastic debt market with a fantastic REIT market. But because they're first generation entrepreneurs, many of them, they like the idea of growth as well. So they don't just buy the bonds, they buy the equity in the REIT because they like the coupons that come with it or the yield that comes with it, but they also want to see growth. And that's where we've been able to get this unique mix of investors' interests and issuers' interests well aligned in Singapore.
Can I be a bit of a devil's advocate here? I mean, I think it's great that Sutat has given such great statistics to back up how vibrant our market is doing, and that's good to hear. But you know, the talk on the street, and I practice in the space of IPOs, the talk on the street is a lot of people would rather list in Hong Kong, for reasons other than the vibrancy of the stock market, so that's another conversation. But there's also talk about how there's over-regulation in the Singapore market. It costs too much to stay listed in the Singapore market. There isn't sufficient institutional or local investor-based support in the Singapore market. You and I talked about coming out in the 1990s, which is when we started our jobs, right? I remember back then when the IPOs were so oversubscribed that there would be pictures of boardrooms filled with balloting envelopes and people would go in and pluck one from here and one from there. You don't hear about that at the IPO markets anymore. Nowadays, there's difficulty filling the book. It used to be 90% public tranche, 10% placement tranche. It's now the other way around. And there's an argument on the street that there's insufficient internal sovereign wealth support for our listed companies. And our SMEs are not getting the support that they need. They're finding it very difficult to get listed. Even if they get listed, there isn't sufficient research coverage for that because a lot of the broking houses have to cut back on the research coverage. So it's not to take anything away, but the big ones are going away. The small ones are finding it hard to get onto the highway. The toll is too expensive at some point, or maybe the funnel is too difficult to operate on the highway.
There's a need for the industry to consistently come and cover. And of course, there is the bigger companies as well, as you talked about. The big ones generally take care of themselves. It's really the middle that we have a challenge. How do we get more institutional funds? In the 1990s, absolutely. All the small cap funds were mostly investing in Singapore. Today they are investing globally because we do see a need to re-engage the wealth of institutional money that's managed in Singapore, public sovereign related as well as private related, to support the ecosystem that feeds them.
Being devil's advocate as well, whether the word broking, it will be an archaism in 30 years' time. I mean, that's the way
that's a really long horizon.
Well, right, 10. I mean, it's going. It's going. In my side of the business, disintermediation of how we get to the investor is changing all the time. What's happened, reminds you, they're going. You wouldn't reinvent them. So I think the whole model, whether it's by insurance or whatever, I think is going. It'll go a different way. That's all. We're celebrating FinTech Week as we speak here. Clever young people are going to find a way of making the experience cheaper. Sorry, not cheapening. Which will mean that people will be able to access financial investments quicker. And those that don't, picking up your other point, are going through they're going to pay for some advice with a wealth manager, and the wealth manager may decide we'll just put you passive at a few basis points, or they come to Aberdeen or Nico and say we want to pay for some skill, and hopefully we provide some alpha. So I think there is a bifurcation going on there already. I think the retail guy is there. I think one of our other problems here, and this starts another whole political can of worms, is the structure and the whole thing about CPF. Because that's where most retail wealth resides in this country, which is not brought in from overseas. And it's incredibly immobile. It's very static money. Many of my competitors have come here thinking there is billions in CPF which should be available, addressable for investment. It's not.
Well, there is actually, the last look, the amount of assets available under our reduced CPF investment schemes available for deploying into the markets or funds is about 80 billion, and this is after withdrawals for housing, Medisave.
Available, I agree.
Available, yes, absolutely. But deployable, not yet.
Exactly my point. You're rewarded 2.5% or 4.5% to do nothing.
It's a bit of a distortion,
good,
but
really.
politically I think it may be expedient, but to the extent that they sit there, not deployed, in the local market or in funds or other pension products, it creates the money is managed by GIC externally. So that's where, unlike even Malaysia, where EPF comes back in and supports the market, all the
It's all
superannuation.
outside, so that's the point. All the money is outside. So Temasek has set up Heliconia, I think, which is trying to support the market here a little bit more. But by and large, our sovereign wealth funds and a lot of Singaporeans' money, pension savings, is all being deployed offshore.
But nothing precludes a CPF IS investor to say, let's dollar cost average and buy the STI ETF, which whether you come in before Lehman's, after Lehman's, before the Asian crisis, your dollar cost average returns for the STI is over 6% per annum. So that's a pretty good return that the equity market delivers long term. Nothing precludes that except financial institutions who would like to sell other embedded products.
So I went to my bank and I tried to buy an ETF with my CPF monies, and I got the runaround from the broker a bit. He's like, yeah, exactly. So he's like, I'm not really sure how to do it. And I was very clear. I just want to buy an ETF, track the market, put this pool of funds into that. And I had all sorts of difficulties.
They have reduced a sales charge, the bit the seller gets, to zero.
Yeah.
Or next year, zero. There is no incentive for anybody to market.
Exactly. Exactly.
So in a way that's counterproductive. That's money that wouldn't go into the stock market, even if it was through an ETF.
Yes.
The fact of the matter is, there's a lot of different instruments and opportunities right now available, which can also use the CPF to deploy. Perhaps there may be different types of vehicles that can allow co-investment into a small cap basket, SMEs locally, or mid-cap basket that can allow investors to deploy more regularly and more safely rather than picking a single stock.
Just wanted to develop that because I think that's actually the most important key thing, and the takeaway for me is the ecosystem, which is the end word, right, has got to be continually developed here, and it's done a really good job so far. And the main thing, and we referred to it right at the beginning, is the growth of the wealth management sector here, alongside our side of the industry, but we're roughly equivalent, shall we say, Hong Kong on that. But the wealth management is distinctive here. Now, it's not the fact the money is here which is important, because that money is going to get invested all around the region, if not around the world. Singapore will get its fair share. The really important thing to attract companies here is the wealth allocators, the capital allocators sit there with it. So there are two spots in Asia, it's here in Hong Kong, and I think my money will be on here longer term for more of it to be here. You go where the people who decide where the money goes. And that's why I would still be relatively optimistic with good regulation, with the growing ecosystem generally, that we will do okay here, and the pendulum will swing.
So there are two ends of the market. One which will look at large companies, and I wish there were more large companies, but there's also the single country funds which we also provide to the market, which has a lot of flexibility to look at mid-caps, and we really do make it our business to discover these names as well. And we think that it's discovering the companies which will be the large caps of the future. And without our participation when they're smaller, then this doesn't get done.
Are your own clients looking for those growth names in Singapore? Or are they just finding them elsewhere in the region?
If you are a retail client, obviously, then that goes along with the kind of fund that you're buying. So in our two portfolios, one will be more growth-oriented and one will be more yield-oriented, for example. But among institutional investors, for example, what we see is that the local institutions will be very supportive of the local market. So in that sense, they would also be very open to investing in smaller companies. But if you talk about institutions which are larger, international institutions, for example, then they would tend not to allocate to Singapore individually. They will allocate through the region, and then that's where you have to be large to get their attention.